remind you of the topic, the inspiring topic, A World in Transition. We will now begin the panel Connections, Asia, Africa, and Middle East. The moderator of this panel is the Secretary for Economic Affairs, International Economic Affairs of the Ministry of the Economy, Erivaldo Gomes. And our guests are Khaled Sherif, Vice President of the African Development Bank, and Joachim von Amsberg, Vice President of Policy and Strategy of the Asian Infrastructure Investment Bank. We have also Anil Kishora, Vice President of the New Development Bank, and our commentator is Francisco Gaetani, Professor of the Getúlio Vargas Foundation. So I would like to welcome our moderator, Secretary Erivaldo Gomes. It's a pleasure to have you on our second day of the Forum on Development. Thank you very much.
Thank you, Adalgisa. Thank you, my good friends. Ladies and gentlemen, good morning and welcome to the panel. This panel Connections Asia, Africa, and Middle East. I'd like to thank Brazilian Association of Development, ABDE, for hosting us, our guest panelists for participating, and to all who are watching, thank you. It's a pleasure to be with you. As the title indicates, we are all connected. We live in a global village, and we interact now in a global economy. No matter how apparently distant in terms of miles, our destinies are closely linked. The COVID-19 pandemic, the international climate change efforts, and the importance of promoting even distributed gains from globalization all illustrate how important it is to collaborate actively. Regional banks play a key role in channeling available resources from regional budgets for the promotion of economic and sustainable development at the local level. Regional development banks are increasingly relevant because of the resource they can channel and because of the technical expertise they offer. I look forward to this morning panel. It brings together high-ranking representatives from important regional development institutions who share the desire to promote development opportunities and who can bring a valuable perspective for the Brazilian audience on the role these institutions have in their regional context and how they can expand collaboration with Brazil. In the last years, Brazil has increased its participation in international development banks. I would like to begin by asking our guest panelists for brief introductory remarks and to describe its institutions' activities for the Brazilian audience. In light of the current structure of operations of each development bank, you represent how can Brazil greatly participate and engage with your institutions. Also, I'd like to ask you, how can development banks you present assist Brazil to increase its connections with the regions that host each of your institutions? And in what ways can your development banks assist Brazilian companies to increase their commercial participation with the banks through the offer of goods and service in each region? I would like to give the floor to our participants, and I will ask our panelists first, Mr. Dr. Khaled Sherif from AIIB, the African Development Bank. Then we will have Joachim von Amsberg from AIIB, and Dr. Anil Kishora from MDB. Please, Mr. Khaled.
Thank you very much, and thank you all for having me. So first and foremost, the African Development Bank is Africa's primary regional development bank, whose main purpose for being is to promote growth in the 54 countries that make up the African continent, to ensure the prosperity of Africans, and to develop the continent on all of the indicators specific to the SDGs, and to what we call our high fives, which represent the development objectives that the African Development Bank sets for itself. Specifically, Africa and the relationship with the world is extremely important. As many of you know, consumer expenditure from any continent is key to its development. And consumer expenditure on the African continent has grown at a compound annual rate of about 3.9% since 2010, reaching about 1.4 trillion as of last year, and that figure is expected to reach 2.1 trillion by 2025 and 2.5 trillion by 2030. If we can put my PowerPoint on the African continent's gross domestic product expected to grow to about 5.6 trillion by 2025. Can we have the first slide, please? If you can go to the next slide. This is obviously a huge market and a market with tremendous potential. The African Union has set up a continental free trade area, or what we're calling the African Continental Free Trade Area, recognizing the critical role that African businesses can play in enhancing the continent's regional integration, but more specifically, as a catalyst for also promoting foreign direct investment from all over the world. And obviously, it offers tremendous opportunities for Brazil. The African Development Bank does play a key role in developing the development strategy for the continent. And in this regard, we've developed what we call our regional integration strategy for the African continent to embrace the private sector as a key partner in achieving an integrated continent, in promoting foreign direct investment, and getting businesses to grow across borders, foreign direct investment grow across the continent. But unfortunately, intra-Africa trade today only accounts for 17% of the continent's total trade volume. So Africa is not very good at trading with itself. It is actually much better at trading with the world. And so when you look at that 17% of the total inter-Africa trade volume, it's a very low figure by global standards and significantly below Asia, which trades at about 59% within its continental neighbors. Europe, with its continental neighbors, trade about 69%, and similar to South America. But unfortunately for the African continent, as you can see, bar chart, it is a much lower percentage at 15%. So one of our primary objectives is to promote intra-Africa trade along with enhancing foreign direct investment. And as many of you know, in the African continent, it is basically where the world's industry gets its raw materials, and roughly about 26% of the world's production from basic raw materials does come from Africa. So there is a tremendous amount of potential in Africa. It is clear that there are many business opportunities, but for Africa to grow, Africa needs industry, it needs businesses to have a certain level of economies of scale to be able to compete in the world market. It needs technology, and it needs to expand beyond its home markets. Commercial bank lending remains the most common source of external finance and growth capital for businesses, which are very consistently heavily reliant on straight debt financing to meet their startup cash flow and investment needs. This is why investment, especially foreign direct investment, is key to get technology, to get financing for African businesses, to get them to a level of scale where they can grow and compete internationally. Next slide, please. For Africa's future to be solidified, as you can see from the second slide, so if you can go to slide 2, please, you'll see that following the African Union's focus the heads of state of the 54 countries and their focus on regionally integrating the African economies. The whole concept here is, how do we create within the African Union a common market that integrates Africa, that liberalizes and promotes the flow of goods and services, enhances investment, brings more capital into the African continent, allows for the free movement of labor within the African continent, and to make sure that Africa is able to become an economic powerhouse and to have that level of economic integration that we see in the Americas and we see in Asia and in the European Union. But to implement a vision for integrating Africa, we will see that there has to be some vision for promoting trade and investment, for promoting regional infrastructure, and for a coherent set of instruments for financial integration. You would have seen that if we had the next slide, but I think it's the slideshow is not moving. No worries. On slide 3, for those that have, if we can go to the slide after that, please. Thank you. So as you will see on financial markets integration, this is key to everything that relates to developing Africa and the 54 countries within the African continent as a common market. Financial market depth and integration are essential for economic development, specifically in the African continent. As Brazil has found, the traditional financial market, composed of commercial investment banks, insurance companies, and market-based mutual funds, and exchange-traded funds, is focused on the corporate sector. But in most cases, these are very highly regulated industries, and if listed company equity issuers are subject to considerable disclosure requirements. So for Africa, above all, there has to be more of a focus on returns to shareholders, which means that they have to operate at scale, and we have to create a framework for large-scale and conventional financial institutions in the African continent to promote trade finance, to promote guarantees, to promote the growth and development of a coherent payment system, and to develop capital markets to integrate them. And Africa is somewhat behind in this regard. But Brazil has experienced this mismatch in developing its different instruments. And this mismatch is common also across the globe, but is probably Africa's biggest challenge for the time being. Many OECD economies have really focused their efforts on financing small businesses and focused on developing commercial banks and credit unions to promote growth in the African continent. And this is basically the African Development Bank strategy, is to make financial market integration a priority, to develop a suite of lending instruments to promote the private sector in Africa, to promote financial integration, to promote economic integration across countries, and to promote foreign direct investment. Next slide, please. As you will see in the next slide, in Africa, we face similar challenges as Brazil, where most businesses have difficulties getting bank finance. This is why foreign direct investment is so important. So this is particularly true for working capital needs, for basic inventories or bridge financing to meet short-term payment obligations. So this lack of adequate financing extends across both small and medium-scale enterprises. There is on the continent a situation where private equity tends to lack flexibility to support companies, especially when it comes to cross-border expansion. Every country has a different set of rules on the African continent, a different set of investment regulations, tax regulations, different customs regulations. This in turn, even with different interest rate structures across countries, does not promote intra-Africa trade. And intra-Africa trade, the economic union of the 54 countries in Africa, is essential for its development. So how do we solve this problem? The African Development Bank is working with partners across the continent to narrow the challenges facing financial market integration. And a starting point is working on strengthened payment systems to enable faster processing of transactions And as new technologies such as blockchain evolve, we expect to see more possibilities open up for businesses, for households, and for those who have been traditionally disenfranchised. Next slide. As you can also see on the next slide, the African Development Bank is moving towards information platforms that link markets. Now, this is intended to open up procurement opportunities for businesses, which is key for Brazil. I mean, especially when you see that consumption in Africa is going to reach $2.5 trillion by 2030. Exporting into Africa is basically the future. And if we can open up opportunities for businesses to identify, especially e-commerce opportunities, this is where the future is. However, these opportunities will remain fragmented and localized without greater physical infrastructure connectivity, which is the focus of what we're trying to do. So while we strive to open up and connect markets, we also recognize that the physical movement of goods and transmission of data for logistics are absolutely necessary for the potential of e-commerce to be realized on a continent-wide basis. Without this, Africa really will find much difficulty in not just getting the investment that it needs, but the development that it is seeking. So we have targeted programs specifically for trying to create these kinds of platforms for MSMEs. We're looking at moving away from traditional areas of focus towards trade facilitation from an e-commerce perspective, and keeping all of this consistent with the objectives of the Africa Continental Free Trade Agreement, which does promote the concept of an African common economic market. Next slide, please. So the support that we envision at the African Development Bank is support for entrepreneurship. The linkages specifically between globally integrated financial markets and real sector economies, and these have to be powered by an unprecedented pace of innovation in telecommunications, data information transmission specifically. And so Africa needs the technologies that will allow for platforms, e-commerce platforms, to basically pull future development, especially to promote trade and develop the ecosystems that are necessary, where economies don't develop traditional infrastructure for promoting trade, but find enormous opportunities in opening up agriculture, in opening up exports of different types, in promoting MSME development through a form of support for entrepreneurs and developing markets through e-commerce opportunities. Next slide, please. To get there, though, we need to make sure that we address the legal, regulatory, and institutional environment challenges that Africa faces. And this is what the African Development Bank is focusing on. It's basically looking at how across 54 countries in Africa, we can address weak business environments, we can promote large-scale investment, we can get the continent to a level of economies of scale to allow it to compete, to allow the African continent to compete internationally and its 54 countries to do so. Because unless Africa produces at scale or specializes in terms of what it offers to the world, this is what's going to be key for Africa. And for all of you that need to understand the characteristics of the 54 countries that make up the African continent, about 28 of them export only 3 primary goods. And so economic diversification for individual countries is key. Developing value chains is key. Developing the potential for exporting something other than raw materials, but moving towards intermediate goods and processed goods is key. And this is effectively the way we hope to grow wealth on the continent. Next slide, please. So for Africa, support for entrepreneurship, we have to accelerate support for entrepreneurs across the continent. The African Development Bank is focusing, as you can see on the next slide, support for innovation hubs, incubators, as a way of accelerating the growth of private companies, We are working with business associations to support trade enabling information platforms. We're supporting one-stop border processing to allow for easier movements of goods across the 54 countries and easier ways of importing goods into the African continent. And we're focusing on accelerating investment into special economic zones and eco-industrial zones to ensure needed infrastructure and a critical mass of suppliers. And finally, to make sure that that we develop regional value chains to allow for commodity-based value chains to be the future of Africa out of the context of exporting only raw materials and getting into more value-added type exports, and in turn creating wealth on the continent. So just to close, Africa is trying to regionally integrate, is trying to become an economic entity similar to the European Union minus Brexit, and is trying to become a continental free trade area to capitalize on opportunities for promoting economic development and to promote growth in the private sector like never before. But companies require support, as you can see on the last slide, for having uniform business regulations and market linkages that are consistent across the continent. So we are working to enhance cross-border cooperation with our 54 regional member countries. We are working to develop financial and regional value chains. We are trying to strengthen our support for the private sector by creating different facilities that will allow it also to partner with countries like Brazil in the future on areas of industrial development that are key to growth. And finally, just to say that in a continent like Africa, wealth creation is its utmost priority. Economies, the 54 economies that make up the African continent, roughly 18 of them, people still live off less than $2 a day. With that very limited domestic consumption, this will not fuel growth. And so the future for Africa, the future for wealth creation in Africa is dependent on creating jobs, creating investment opportunities, developing value chains. And then once we begin to see a more consumer response, when we begin to see average incomes rise, and we see, as we're seeing now in select parts of Africa, consumption increasing 3 to 4-fold in less than half a decade across select areas of the African continent that are now growing as faster than virtually any country in the world. This is what we would like to replicate across the African continent. And just in my final word, Africa is the future, and Africa is tomorrow's investment opportunity. And I think Brazil would be wise to keep an eye on Africa as a partner and a partner in development. Thank you very much. Thank you.
Thank you very much, Dr. Khaled. Some other companies and countries are profiting from opportunities that we have in Africa. We have the opportunity to have a very good presentation on all these opportunities that we could have in Africa for Brazilian companies in areas that we traditionally not used to be to have in Africa. When we think Africa, we think sometimes in infrastructure opportunities, opportunities for infrastructure contractors. But as we saw from these presentations, we have other interesting opportunities in financial services, e-commerce, logistics, agriculture, food processing, and also in environmental services. Good to know that AIIB may support Brazilian companies developing this type of activities in Africa. So moving from Africa to another very dynamic region, let's go to Asia, and I would like to ask Dr. Joachim von Amsberg to present AIIB and the opportunities we have with AIIB and Asia. Mr. Joachim.
Thank you very much, Erivaldo, and thank you very much to the organizers for inviting me and the AIIB to participate in this forum on this highly relevant and important topic of connections and connectivity. Of course, multilateral development banks are all about making connections. And I want to talk about physical connections, economic connections, and finally, institutional connections. Maybe just a word first on the physical connections. Of course, we as the Asian Infrastructure Investment Bank, as our name suggests, we are about infrastructure, and infrastructure is about physical connections first and foremost. We may possibly first think about transport infrastructure, the highways, the rails, the ports, the airports that facilitate trade, carry goods and people. But increasingly, connectivity infrastructure is not just about transport, as important as transport is and will remain. It is also about energy connectivity. Of course, gas pipelines cross countries' borders. We have fleets of LNG tankers floating the globe's oceans. But we also have increasing high voltage transmission lines crossing countries' boundaries. And we may have in the future pipelines that carry hydrogen from one country to another. In Asia, we have sub-regions where energy trade is increasingly important. In South Asia, if you look at countries like Nepal supplying electricity to India and Bangladesh, you have other countries like Laos, PDR, providing energy exports to their neighbors. You have major opportunities in the Central Asian republics for economic development from power sector and energy sector integration. So energy connectivity is likewise very important, but so is data connectivity. Increasingly, services are traded through data infrastructure. And so for not just countries to be connected, but the hinterland, the smaller cities and rural areas of countries to be connected to global connectivity and global trade, data connectivity is becoming increasingly essential. Just last year, we invested in a private company that is building a satellite network that will bring high-speed internet to many of the still unserved of the 17,000 islands of Indonesia. A key aspect of connectivity to bring large remote populations into the global economy. Because connectivity and global market integration isn't and shouldn't just be about big companies, big producers, or large commodity raw material exports. It can be a driver of broad-based, employment-intensive, inclusive economic growth. But domestic infrastructure and connectivity is the key for that. If it is just about large ports and airports or large transport arteries, then yes, connectivity integration may be about just the big companies and rather capital-intensive investment. But integration and connectivity is about small companies, is about employment-intensive companies when domestic infrastructure supports that integration. And that applies to all dimensions of connectivity, to transport, energy, and data, to mention just the three most important aspects. So far for physical connectivity. And a word on economic connectivity, and in particular cross-border trade and investment. And I speak here from a region, from Asia, where cross-border economic integration has been a driver for economic development for decades. Early developing countries in Asia that are now high-income countries. Of course, Japan, Korea, China following, and others have decades of experience with external integration and trade-driven economic development. Successful alleviation of poverty, successful economic development over decades that has been driven by economic integration by trade. But it is also the middle and the low-income countries of Asia that are following this path. If you look, for example, at ASEAN, the 10-nation Association of Southeast Asian Nations and their development, again, it is economic integration, cross-border trade, cross-border investment that is critical for their progress on economic and social development. If you look at countries like Vietnam, Philippines, Indonesia, to mention just 3 of the ASEAN countries, significant economic growth has been driven by economic integration, participation in regional and global value chains. Whether that's components trade for electronics or whether it's business process outsourcing, again, connectivity infrastructure, whether physical infrastructure, data infrastructure is critical for that integration. And I think Asia provides many illustrations and examples for the long-lasting benefit of connectivity, integration, cross-border trade, and investment. But of course, Asia is not homogeneous at all and provides many, many more opportunities that have been untapped so far. So while, for example, economic integration within East Asia is quite strong, integration between South Asia and East Asia is rather weak. So even within Asia, there are plenty of opportunities to increase benefits from closer integration. So let me then turn to the institutional connectivity, because that touches in particular on the role of multilateral institutions. It is particularly the multilateral development banks that, because of their particular governance model, I think can provide the institutional support for regional and global integration. And I think we can do that. We can play an effective role because we can help provide comfort, help provide trust, and help provide mechanisms for dispute resolution, enforcement of regulation, better understanding of regulation and standards. Obviously, when investors make large investments with a horizon of several decades in physical infrastructure assets, the reliability of the regulatory framework is critical. So here, multilateral development banks can provide critical support and trust, because it happens that the governments of the host countries are our shareholders, just like the governments of all our members. It applies in the future to areas like digital privacy. It applies to cross-border investments, where we see, for example, interest from some of our members to be involved in the investments that Chinese companies make in their respective countries, to make sure that they have a trusted multilateral partner in the project on who they can rely for reliance on standards, environmental and social standards, governance standards, labor standards, and the like, so that there's increasing trust and reliance on internationally acceptable practices in cross-border investment. So these are all examples of how multilateral development banks can help with institutional connectivity, building trust, and providing the supportive environment for cross-border economic integration. Now, let me make a few last comments on our own institution, the Asian Infrastructure Investment Bank. We have been founded just a little over 5 years ago with a single focus to help our members with investments in infrastructure and connectivity. So our mandate is exactly to promote the connectivity that we're talking about in this session. And this connectivity, as our articles of agreement say, in Asia and beyond. And beyond, of course, includes Latin America, and of course includes Brazil, which is now one of our full-fledged members of AIIB. And China initiated the AIIB in 2015, invited other countries. 57 countries joined as founding members. By now, we have 103 member countries. I think a tribute to the trust that has been built, that AIIB is truly a multilateral development bank that initiated by China, but is following international and standard governance of multilateralism, which means the voice and the interest of all members is protected. We have a firm legal foundation, the treaty that has founded AIIB, which ensures the rights of all member countries that cannot be dominated by any single member. We have $100 billion subscribed capital. We received the AAA rating from the international rating agencies. And we are trying to build on, but innovate on the governance, finance, and business model that has evolved in institutions like the World Bank, the Asian Development Bank, the Inter-American, the African Development Bank over the last 70 years. Of course, our membership is a little different. It reflects 21st century economic roles in Asia and the world. Our largest shareholders are in order China, India, Russia, Germany, Korea, just to give you a sense of the diversity. And we opened our doors in 2016, as I said, 5 years ago. We have invested since then $24 billion in infrastructure across Asia and a few non-Asian countries. We have a mission that is investing in infrastructure for tomorrow, that is infrastructure that is green, that supports our members in their ambitions to transition toward low carbon and no carbon energy and infrastructure systems. Infrastructure that connects countries and regions, that's of course the topic we're discussing here. Infrastructure that draws on the technological innovations and brings productivity gains to infrastructure, which is traditionally a sector that has been quite slow in adopting innovations, but we see that changing with new technologies in infrastructure, in energy and urban development and other areas. And we're trying to bring private capital into developing market infrastructure, which has been, of course, a big ambition, but with very little practical results so far. So we hope that, and we think that AIIB in its short 5-year history is, I think, a multilateral success story in times that were difficult for multilateralism. I think we've seen that here a new institution can be founded, the spirit of multilateralism embraced, and can thrive even at a time when not everyone is following multilateral thinking. As I said, we're delighted that Brazil is now a full member. We're considering our first investments in Brazil. We can invest in public and private sector projects, debt equity guarantees. In investments outside of Asia, we're looking in particular at connectivity with Asia. So whether there's infrastructure that would connect to trade and investment with Asia, or whether it's investment, for example, in carbon emission mitigation, which has a different connectivity with Asia, meaning carbon emissions reduced anywhere in the world benefit the rest of the world and therefore show the global connectivity of global public goods. So we very much look forward to Brazil capturing the opportunities of being a member of AIIB, and we look very much forward to investing in the Brazilian market and therefore helping Brazil and our other members increase connectivities like I discussed on physical infrastructure, physical connectivity, economic connectivity that raises the quality of life of the broad base of the population, and institutional connectivity that builds trust and collaboration between nations. Thank you very much.
Thank you, Dr. von Amsberg. Well, connectivity is key for nowadays world. No man is an island anymore. No one is alone anymore. And the infrastructure, physical and digital connectivity is key to operate in this global village. We are here in this event thanks to this digital connectivity. I totally agree that market and economic integration is something that enable and empower entrepreneurs across the globe. But this integration must be sustainable and inclusive, as you mentioned. I like to go straight to our very good friend, Dr. Anil Kishora from IsDB. He is the face of the BRICS the solid BRICS cooperation we have. Dr. Anil Kishora, please.
Good morning, and thank you, Mr. Gomes. And I would like to thank the organizers as well for letting me be part of this edition of Brazilian Development Forum. And Mr. Gomes just said, no man is an island. I think this book was published in early 17th century, 1620 or 1624, and the world has not changed in that context. It holds good even now. And as far as NDB is concerned, we are an outcome of connections and collaboration. It's all about connections and resulting in collaboration. So BRICS, as we all know, Brazil, Russia, India, China, and South Africa joined hands, and then this bank was born in Brazil, in Fortaleza. So that's another, our birthplace happens to be there, although our workplace happens to be in Shanghai. And then we have extended our outreach through regional offices. So now, as far as Brazil is concerned, we are there in Brasilia and Sao Paulo. So that's about connections and connectivity and collaboration. It's about a little over 5 years ago, 2015, we became operational. So today I basically talk about the bank and what we have done in Brazil to give an idea to the Brazilian audience and who would be listening to the conversation today about what we do and what our plans are going forward. So NDB was established in 2015, as I have already mentioned, and our mandate is very, very clear. The mandate is to mobilize resources for infrastructure and sustainable development. And we believe that infrastructure has to be sustainable. Sustainable infrastructure ultimately will lead to sustainable development. And we propose to do this in BRICS and other emerging market economies and developing countries. Our job, we do realize that the infrastructure gap in the world, in the BRICS, is huge, and no one MDB or no one single institution can fulfill that gap. So our articles of association clearly indicate that our job is to complement, work with other like-minded institutions and other development agencies and complement their existing efforts of multilateral and regional financial institutions for global growth and development. We all know BRICS accounts for close to 45% of the world's population. So no global development can take place, no achievement globally can happen unless BRICS countries make progress. So with that perspective, BRICS has been set up. It's a new type of development bank. So new relationships, non-prescriptive. We do not prescribe policy because we believe that countries or member countries know the best what is good for them. No conditionalities. So we again know that you are the owner and you would like to own your own development. We are also aware that our member countries have made very solid commitments under climate finance, climate change agenda, as also under SDG. So we are all in the same boat. And there is nothing that we need to do to force our member countries in a certain direction. They are moving in that direction. We just need to complement their efforts. It's a demand-driven institution. So we respond to the demand, and nothing could be a better evidence of that. Our recent COVID response, when we set up a $10 billion fast dispersing loans program for COVID response and recovery. No veto power, which is a hallmark of a new 21st century institution. All the members, 5 members, have same voting rights and same vision to pursue. We use country systems, which means we rely on what you have in your own country in terms of governance, environmental, social norms and standards. And as I said earlier, we believe that this is the best way to go about the climate change agenda and SDG agenda, because our member countries are equally committed to achieving these goals. Local currency financing is another area which we would like to ramp up, because we believe that infrastructure, especially by its very nature, the revenues are in local currency. And in case you have to pay off a foreign currency debt, it can lead to foreign exchange risks. So that's the focus area. Sustainability, that's enshrined in our Articles of Association. That is something committed to by our member countries as well. Fast, flexible, efficiency. So we have a very lean structure and processes that lead to quality outcomes without creating a huge bureaucracy here. And again, it's back to connections and collaborations, building and leveraging partnerships. And in this connection, for example, just to cite an instance, we have been working very closely with BNDES in Brazil. Could you move to the next slide, please? Yeah, so just give the audience and the participants an idea of the overview of NDB's operations. By December 2020, we had approved close to $25 billion for 68 projects. It's geographically well balanced. Brazil accounts for about 20% of our approved loan book. And by financing, as I mentioned, our focus is to develop the local currency lending as well. But as of now, it's about roughly, say, and if you include euro as well, so roughly 1/4 of our book. In terms of various sectors, we have funded clean energy, we have funded environmental efficiency. COVID, of course, is a major chunk because of this unfortunate pandemic which came up, and urban development. So the sectors, again, in line with our demand-driven approach, depending on what our member countries want, we have focused on these sectors. Next slide, please. There is some issue in movement, but doesn't matter. Let me go ahead. And in terms of what we have done in Brazil, especially once we got our regional office operational there, we have funded in certain very key areas, like one renewable energy project with a total installed capacity of 800 megawatt, 3 transport projects, which resulted in upgrading of 790 kilometers of roads, 2 urban development projects, environmental efficiency projects, which could curtail carbon and sulfur emissions. We have also done a social infrastructure financing in 28 schools there. Then we have 3 multi-theme projects with a number of sub-projects. So that gives a flavor of what we have done. And on the next slide, we talk about what we have, what are our plans for the future. And that's the concluding slide. We are saying, looking forward, that we do realize that all our member countries, including Brazil, will need more and more developmental financing. As my colleague from AIIB was mentioning, for that we have to mobilize private resources. So that's really important. And we'll join hands with Brazil, because we are today focusing on Brazilian development in terms of sustainable development goals and climate goals. As we all know, Brazil supporting and nurturing Amazon is one of the biggest producers of oxygen. And again, in terms of our collaboration with Brazil, we'll learn from Brazil in terms of innovation and knowledge in clean energy, biotechnology, etc., where there are strong leaders, and we'll continue to collaborate to deliver on our developmental agenda. So thank you so much.
Thank you very much, Dr. Kishora. Knowledge and innovation is key to achieve our development goals. Without further delay, I would like to ask my good friend Francisco Gaetani to present his comments on all these very interesting presentations. Dr. Gaetani, please, the floor is yours.
Thank you, Erivaldo. It's a pleasure being here discussing with all the world the opportunities related to development finance in Brazil. I'd like first to highlight how important the comments, the presentations, the insights they brought to us here. I'd like to highlight each one some special issues. In the case of Mr. Sherif, I think that Africa is much closer to Brazil than we usually realize. And when we are talking about infrastructure, connectivity, wealth creation, the need to invest in jobs creation in order to generate wealth, we are in many ways much closer to Africa than to the developed world. Brazil has many countries inside it, and Africa has been very successful, especially the Orient Africa countries, in terms of leapfrogging thanks to technological innovation and to some very creative finance mechanisms that allow them to enable market developments in a very impressive and substantive way. I think that if we look to Joachim's presentation also, and he knows Brazil very well, he lived here some years, it's impressive how the word connectivity, it became key to all debates about finance development. And we're talking here about infrastructure connectivity, energy connectivity, institutional connectivity. And that's because when you integrate all countries in many umbrellas, in many networks, you accelerate the learning opportunities, you accelerate innovation chances, you accelerate transactions. And as the recent events in the world showed, can we think the COVID pandemic without the internet? I think we can't. And there are so many opportunities that emerge in this context that we have to take advantage of them in the recovery that we are envisioning now. I think that the world is moving towards a very precious window driven by China and US growth. And we have to take advantage of this situation in order to recover better, recover in different terms, recover according to different parameters. And most of the countries that belong to the institutions that are represented here, we can learn with each other in order to take advantage of this situation and to overcome the current context. Professor Dr. Kishora, I think that when he talked about the BRICS, a bank that Brazil is very proud of belonging to, we have to take into account that ownership is a key word, and he expressed it very well, this concern in his presentation. And for Brazil particularly, which is a climate power, a climate change country that is unique in the world, we are very happy to see how the climate goals, the SDGs, and are relevant in its priorities. Also, I think that all these banks, they have lots of lessons to teach us. We have a very solid and robust network of development banks in Brazil. And we think that we have lots of things to share and to learn with each other. But I'd like to leave one question for all of them if we have opportunity to discuss it later. in many ways, our problem is not the availability of resources. Our development banks, they are fine, they are healthy, but liquidity is fine. But in order to loan, in order to lend the resources, what can you tell us about institutional building, capacity development, in order to support our markets and our governments to borrow these resources in order to produce the wealth the country requires? Thank you very much.
Thank you, Gaetani. Well, I see. I'm realizing now that we are running out of time, and we'll have other very interesting panels in the following. I'd like to ask our panelists to comment and also to present their final remarks, to react to Gaetani's comments, and also to present their final remarks, starting with Dr. Khaled Sherif. Please, Dr. Khaled, your comments and final remarks on the issues we discussed today.
Well, thank you very much. I mean, really nothing much more to add, but I think to the points made by Dr. Gaetani, I think Africa is really the continent that is open for business, and I think the immense potential that Africa carries is really the investment opportunity of tomorrow. So I think if we were to look at Africa as a block of countries where the level of consumption is likely to grow sevenfold in the next 2 decades, the potential for exporting into Africa and the potential for opening up new markets is unparalleled across key parts of the continent. Similarly, there are the opportunities for working with African countries to partner with the private sector to further industrialize, to promote a new wave of exports is definitely the future. So through our Africa Investment Forum, we do have a platform for Brazilian investors to actually interface with the private sector across the 54 countries in the African continent, who present their ideas for how they'd like to promote their businesses. And I think maybe there could be a future opportunity for developing that partnership and cooperation with Brazil. And we will share information on the Africa Investment Forum with any of the participants that may be, especially on the private sector side. Thank you very much.
Thank you, Dr. Sherif. I'd like to ask Dr. von Amsberg to comment and react to Gaetani's and other issues raised during this panel. Dr. Amsberg.
Yeah, thank you. I think there's the one single comment I want to pick up is Professor Gaetani's last remark on, if I understood it correctly, money not being the main constraint, but institutions' policies being the constraint to investment and development. And if that's what you were saying, I can only wholeheartedly agree with that. Rarely is simply the availability of money the constraint to investment. And almost always is the availability of well-prepared projects, a good policy framework, good regulation, good standards, what stands in the way. But I want to emphasize that the whole business model of the multilateral development banks, and I think that includes the 3 represented here, but also the other ones that are active, is all about using money to help countries or help project sponsors build better policies and better projects. Not by preaching, not by thinking that we know it right, but by allowing sponsors to use multilateral development financing to build into projects the standards, the institutional development that they want to pursue to create sustainable conditions for development. So as country-owned development banks, I think we are in a unique position to be used by our members to use the investment resources to build the institutional framework that they want to build for their own countries, because that development has to be profoundly based on each country's own vision, own leadership. But we are a tool for them as being banks that are owned by the member countries we invest in. So thank you very much.
Thank you, Dr. von Amsberg. Finally, I would like to ask Dr. Kishora to react and to present the final remarks on the topics we discussed.
Thank you. I will take off where my colleague, my friend, VP Joachim ended. And I agree, it's the same question that Professor Gaetani raised regarding funding. And we all know there almost $17 trillion of money is either earning no interest or no interest. And US is zero interest territory, European bonds, German bonds, and money is flowing into the financial markets, but somehow is not getting into infrastructure. And the problem, in my view, is regulatory, the trading kind of approaches, and the short-sighted vision, etc., etc. And this is really important that this gets addressed, because as the world is undergoing aging, population is aging, we'll have a lot of pension liabilities. How do we meet that unless there is a positive cash flow? When we went to school, we learned that money has time value of money, and that's why you get some interest. The time value concept is completely negated. And I think that the multilateral development banks and others, we are trying to do what we can. We are trying to mobilize private resources, but there is a very strong role for the academia here and for the media. And the academia, and I would like to make that request, we need to highlight that how money has to serve the real economy. That message has to be reiterated again and again, and it has to be driven home that just trading on the stock exchanges is not enough. Please put your money in the real sector, and that's what will bring you real results. Otherwise, we are chasing chimeras, we are chasing imaginary assets which are of no real value. So that's where I will stop. And I think the academia, the economists, the thought leaders can do a lot about it by propagating that message. Thank you.
Thank you very much. Well, we are running out of time. I'd like to thank everyone for this very thorough discussion. We discussed some key transformations on the global economy and how AFDB, AIIB, and NDB may help Brazil to seize the opportunities we have now. Thank you, everyone. Thank you for the panelists. Thank you, Gaetani, for the comments. And I will now hand over to Adalcida. Thank you very much.
Very well. We have two questions from the audience. Maybe can I ask the questions? Only two questions. It is interesting. The participants are sending questions through our chat. The first question, and I'd like to ask you the way you'd like, is Africa, as Brazil has a large territory with countries such as Angola and Mozambique, they have high potential for forest maintenance projects. And how are development banks working in this area?
I'd be happy to answer that. So specifically, the African Development Bank is involved in obviously developing value chains in the forestry sector. So in these two countries, we are part provision of help the timber to higher levels of production. Obviously, Africa is a major export of timber to the world. The African continent is expanding in the areas of value addition. And we would be very happy to provide additional information on the activities which the African Development Bank is involved in, and for directing opportunities of interest in that sector in those two specific countries to the or
We have another question. Since education is the main variable in order to improve digitalization, how is the FDB and the African Union address this unblocking digitalization and the potential for integration and trade?
Again, I guess that question directed at me. So this is a particularly important area, and so the African Union and Agenda 2063 obviously aims to enhance the level of literacy in the African quite considerably, and not just enhance the level of literacy on one end, but to ensure and promote digitalization on the other sphere, to promote important areas like lifelong learning, and create that infrastructure, the infrastructure necessary to promote linkages for the sharing of ideas, to promote trade using e-commerce platforms. But the situation for Africa is much more complex, because digitalization is absolutely key for our enterprises. But we actually also have a very large number of youth that need to have access to internet connections, that need to have access to the level of education to allow them to enter the digital world. So whether it be companies or individuals, the African Union has designed a suite of interventions with the objective of promoting digitalization at the individual level and at the corporate level. Back to you, Anil.
Thank you very much. And I'd like to thank you very much to all participants in this panel. Would you like to add anything?
Well, it's thank you very much for all comments, and sorry I skipped the Q&A. I'm very new on this digital event. I believe that we have a very fruitful discussion here. Unfortunately, the time is out, but I believe that Brazil has many opportunities ahead, and we need to take the chance and take all these opportunities for that we have now. Thank you very much for participating, and thank you all participants for very insightful comments and presentations. And I know that we will have a very also important discussions on Latin America opportunities. Thank you very much.